Ladies and gentlemen, good day and welcome to the Dhruv Consultancy Services Limited Q4 FY23 results conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gopal Chandak from Kirin Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Thanks for joining the conference call of Dhruv Consultancy Services Limited. I would like to welcome Mr. Pandurang Dandavate, Director, Ms. Tanvi Avti, Managing Director, Mr. Rajesh Sindhu, General Manager, Finance and Accounts of Dhruv Consultancy Services Limited. Tanvi ma'am, over to you.
Thank you, Gopal. Good evening, everyone. I welcome you all to the Q4 FY23 conference call of Dhruv Consultancy Services Limited. We are an infrastructure consultancy firm, and our growth is directly linked with the infrastructure, mainly the highway segment. We are working in 6 sectors at present: highways, bridges, tunnels, architecture, metros, and ports. So the focus of the government is on infrastructure, and therefore in the budget, there has been a heavy allocation of capex. The government has announced a capex spend of rupees 10 lakh crore, that is 33% year-on-year increase in FY24 budget estimates. This is allocated to sectors like railways, roads, defense, housing, water, and metro projects. The capex to GDP is pegged at an all-time high of 3.3%. And the 2 sectors that stand out in terms of allocation are the railways, which is up by 51%, and roads, which is up by 25%. So given the 50% of the total allocated capex is earmarked for roads and railways, it is a clear indication on structurally bringing down overall logistics costs in the economy, which are currently at 14% of the GDP. The government allocated around 2.7 lakh crore to the Ministry of Road Transport and Highways. This means there is a huge scope for consultancy services. As infrastructure consultants, we provide 4 kinds of services. First is the feasibility study and preparation of DPR. Second is construction supervision for supervision and maintenance work. Third is advisory services, traffic survey, inspection work, and road safety projects. And fourth is the design services, design of highway, design of structures that we mainly provide for private contractors. So consultancy services accounts for about 5 to 6% of the total project cost. Thus, you can estimate the huge potential growth for our business in terms of the budget allocation. Here, only the qualified and an established player has an opportunity to bid for new projects. So, there is a difficulty for new entry. Now, let me explain you how consultancy bids are evaluated. In the consultancy business, it is not the lowest bidder who is awarded the work, but it is based on 2 factors. First is the technical score, which is 80%, which has 80% weightage, and second is financial score, which has 20% weightage. So this technical score comprises of the company credentials, the equipment that we are using, the CVs of the professionals that we are proposing on site, and the 20% weightage is for the lowest bidder. So proportionately, how lower or higher is your bid, the marks are considered. So 80 plus 20, whoever is the highest is awarded the work. So based on our past experience, we have grown from a score of 88 to 95 plus today. We have reached 96, 97 also. Thus, we are very optimistic in getting good orders from the estimated order outflow for the next 2-3 years. We have not just restricted ourselves to the domestic market. We have also started taking up works in the international market, and we are expecting to win 1 or 2 projects with high profit margins very soon. As far as international projects are concerned, we have submitted bids in African countries, Southeast Asian countries, Bangladesh, Nepal, Cambodia, Vietnam, then in African countries, Zambia, Tanzania, Nigeria. And we have been shortlisted in about 7 projects where result is awaited, and submitted more than 65 expression of interest in these countries. The order inflow in the past for FY22-23 especially has been the best in the this year. Company completes 20 years of its existence, and FY22-23 has been the best till date, and the company has received orders of 150 crore plus in one single year, which is the highest achievement ever. So our unexecuted order book stands at 230 crore as against the total order book of 500 plus crores. Few projects that I would like to mention here is that the company is working majority of expressways. We have recently completed the Delhi-Vadodara expressway section where COD is being issued. We are working in Raipur-Visakhapatnam, Delhi-Dehradun expressway, Amritsar-Jamnagar expressway, Amritsar-Bhatinda. So such prestigious projects are under the belt of Dhruv Consultancy, and the major is the Ganga Expressway project. This is being done by UPEDA, the UP Expressway Industrial Development Authority. The Ganga Expressway itself is a 594-kilometer long project, and it is an important part of the government. It is an important project for the Uttar Pradesh state government. It is from Varanasi to Meerut. We are marching with high flow of orders, and FY24 looks to be full of opportunities, as this is going to be the year before the central government election. So we are expecting huge number of order inflow here. Now I request Mr. Rajesh Sindhav to take you through the financial performance of the company for the reported quarter and FY23.
Rajesh sir, over to you. I think you're on mute. Yes.
Hello.
Yeah, we can hear you, sir.
So good afternoon, Tanvi and Pandurang sir, and other shareholders. I'm giving a financial highlight for the FY23-FY22. The total revenue of the company has grown by 8% from 20 crore to 8.
Sorry to interrupt you, Rajesh sir. Your voice is breaking. May I request you to take the mic a little closer to you and come in network area, please?
Yeah. Now it is been audible?
Yes, this is audible now. Thank you.
Yeah. So total revenue of the company has gone up by 8% from 75 crore to 81 crore. The net up by 6 crore rupees. The total expenditure has gone up by 13% from 67.66 crore to 76.63 crore. So net up by 8.97 crore. The major contribution for increase in the expenditure side on account of the employee cost has been gone up by 10% from 17 crore to 19 crore. So the net increased by 1.74 crores. The finance cost has gone up by 69 lakh rupees due to the BG charges and interest on the various loan and processing charges. The depreciation has gone up by 2 crore rupees due to increase in the fixed asset on account of plant and machinery, motor car, and we have bought the IHMCL traffic survey assets. On the administration expenses has gone up by 4.52 crore due to the increase in the professional fee by 5 crore rupees and the provision of ECL provision by 21 lakh rupees. However, the other expenditure in the course of the traveling expenditure, site expenditure, and the conveyance and printing and stationery has been reduced by 74 lakh rupees. The EBITDA margin has been gone up by 48 lakh rupees from the 9.81 crore to 10.29 crore. The PAT margin has gone down by 93 lakh from 5.76 crore to 4.82 crore. And that account of the increase in the depreciation, professional fees, and the employee costs. These are the financial highlights for FY22 versus FY22.
Hello.
Yes, sir. Should we open the lines for Q&A?
Yeah.
All right. Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets for the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1 at this time. The first question is from the line of Tushar Raghatate from Kamaya Kya Wealth Management Private Limited. Please go ahead.
Yeah. Good afternoon, sir, and thank you for the opportunity. So I just wanted to ask a question on the order book. You mentioned in the last call that you have bid for 700 crore orders, and you're optimistic about 30% success rate on that. So I just want to understand where it has gone as of now, and what sort of expectation, what are the expectations for FY24 and FY25 in terms of order book in percentage term growth. I want to understand that. The second would be in the recent quarter, the margins were kind of less. So what was the exact reason for the same? Yes, sir.
Tanvi?
Pandurang sir, you are answering?
Tanvi.
Okay. Yeah, hello Tushar. So to give an answer to your question of the first part. We are as on date, if I tell you the orders bidded are close to 799 crores, and our estimation for the past year has been that we are achieving a success rate of 22 to 25%. So for which results are awaited. So accordingly, you can see the flow of orders that we would be receiving. In addition to that, continuous bidding is going on every month. And as I mentioned in my opening remarks also, that we would be bidding a lot this year as lot many projects. This would be the peak year for infrastructure projects, as more number of projects are to be awarded. Last year we did around 150 crore projects. This year we are expecting 200 crore plus orders. We would definitely be able to bag. Coming to the second answer. As Rajesh ji has also mentioned that the main reason why our margins are slightly low this time is because of the inflow of orders that we have received, and the initial mobilization expenditures are very high, as these are all expressway projects like the Ganga Expressway, as I told you, and the realization of margins takes a certain time. In addition to this, as mentioned in the last Concall also, that we had been awarded the traffic survey project in 2 zones, in one in Maharashtra and Punjab, Haryana, Rajasthan. So for these, the revenues are yet to be realized, whereas the expenditures are on a very higher side. For these, we had to purchase a lot of assets as well, wherein that has had an impact on our depreciation. Otherwise, if you see the operating margins, they are definitely doing good.
Okay. So now you mean to say that you have front-loaded the cost, and the margins will elevate going forward.
Yes, as and when the margins realization happens when the construction period is slightly coming to an end. Initially, the expenditures in any infrastructure project is very high, and the flow of orders that we have been having in FY22-23 and even this FY has been tremendous and has been the highest in the company's history. So there will be a slight effect on the margins because of this, but eventually in the long run, the pictures will be very good.
So what kind of margin we can expect for FY24-25?
See, for for the next 1 or 2 years, this construction is going to go on. So it might have a similar trend because if we, like I said, 150 crore order in last year, this year, if we say that even 200 crore order we receive or keeping the same trend 150, so again the mobilization expenses will be higher. But projects such as ISMCL traffic survey, there the profit margins are higher. So it compensates. Along with that, if an international project is awarded, that will also compensate. So at an average, we are expecting similar margins for the next year as well. And after 2 or 3 years, then these margins will go on improving.
Fair enough, ma'am. Thank you.
Yeah.
Thank you. The next question is on the line of Mukesh Panjwani from Value Securities. Please go ahead.
Yeah. Hi. Am I audible?
Yes.
Yeah.
Please go ahead.
The first thing I would like to understand is that if we see the property, plant and equipment in our balance sheet, previous year it was 6.7 crores. This year it is 11.25 crores. And there's one more right of use asset. Last year it was nil, and this year it is 5.39 crores. So can you throw some light on it? Like we have increased our property, plant and equipment almost by 70-80%.
Yeah. Rajesh sir, can you answer this?
Yeah. So for the IHM's project, we have went for there are combination of lease as well as the loan options. So there is a right of use asset. We have entered into the OPC and ORIX for the 3 years lease period for the finance lease, for which the right of asset has been realized in the books of account. So it is around 6 crore rupees. Apart from that, we have taken some equipment and the software which is required for the IHMCL project, which is we taken through the loan from the HDFC Bank, which is around 2.7 crore rupees.
Okay.
Apart from that, yeah. So these are the major equipment we have bought during this financial year.
Okay. So this is for that traffic project we have taken recently.
Yeah.
Yes.
And then pertaining to that, the expenditure has been arised in the last quarter. The respective income for the traffic survey, we have to submit the report and get the validation from the authority. So the realization will be occurred in the next quarter.
Okay. And my next question is like, can you please tell me that what is the bagged order size for FY23?
Unexecuted order size you wanted to?
No. The orders we have bagged this year.
Yeah. 150 crore rupees.
150 crores. Okay. And what about the unexecuted order book?
We have 250 crore rupees of unexecuted order book right now.
Okay. And what about the international orders? Have you got any recently?
Yeah, so we have been shortlisted in 7 projects recently in the last 2 months, wherein majority of the projects are in Tanzania and Nigeria. And usually the turnaround time, because these are ADB and World Bank funded projects, so the turnaround time goes up to 9 months, 9 to 12 months. So for the award of the work. So we are expecting any time that an order will be awarded, as our success rate has been good in terms of shortlisting.
Okay.
Yeah.
So we can expect in this particular quarter?
Yeah, in this quarter or next quarter, definitely.
Okay.
Yeah.
And what is the total order book as of now, and what would be the execution time for the same?
Total unexecuted order book, as Rajesh sir said, that it is 250 crore and to be executed in a period of 2.5 to 3 years.
Okay.
Yeah.
And ma'am, I want to know one more thing. Like, as we know that the market in which we are working is huge, and there's very good growth potential. But
Correct.
Why haven't we been able to increase our revenues like Q on Q or Y on Y in that manner?
So the revenues, if you ask that, I feel they are increasing good because in the past, if you see the company performance, it is doing double on double every year because till FY21-22 we had received orders of 50-60 crores. Last year we received 150. This year we are expecting 200 plus orders. Because as I mentioned in my opening remarks also that our technical core is increasing day by day. Now, earlier when we got listed, we were working on 2-lane projects. Then we started working on 4-lane, 6-lane. Today we are working on 8-lane expressway projects. So this eligibility has been built over the past few years. That can be seen in our revenue growth also.
But like last year, our revenues were 75 CR. This year it is 81 CR. So we can't see, in revenues, we can't see such growth. Maybe we are getting good number of orders and all, but it is not reflected in our revenues. That is my point.
I think revenues are also on a better side. But yes, as I told you that initially because this FY22-23 has been a year wherein we have received 150, where earlier years it was very less. So the initial 4 to 5 months, the revenue realization takes certain time. Now these revenues are getting realized for the projects which were awarded in Q3 and Q4 of FY23. So the initial period, where the expenditure is also high, that has been the trend over the past 20 years if you follow our balance sheet. And this year and maybe next year also, if we bag more number of projects, again, that is going to be the scenario because initial 4 to 5 months are needed for revenues to start getting realized in the books. So this is a long-term process, and year on year, with so many orders coming up, it is very difficult. Yeah.
In this year, we can hope our revenues would shoot up.
So the 150 crore order book that we received in the FY23, those revenues will be realized, yes, in FY24 to a large extent. But for the projects, again, which would be awarded in FY24, they again will take time to get realized. So it's a continuous process. And then the ticket size has also started to increase. It has gone up from 2 crore, 3 crore, 5 crore, 7 crore. Ganga Expressway is 21 crores. So the ticket size is also increasing year on year. Yeah.
Okay. That's all from my side.
Thank you so much.
Thank you. The next question is on the line of Yashwanti from Cochin Finvest. Please go ahead.
Yeah, thank you for the opportunity. Ma'am, I just wanted to understand, we use infra budget has been announced. So what is likely count that we can have it for FY24 for the FY25?
Can you repeat the last part of your question?
No, I'm saying that there's a huge infra for the road sector. Road segment has been offered by the government.
Yes.
So out of that, how much we can see that growth in our order plan FY24 and FY25?
Yeah, like I mentioned in my last answer also that 2.7 lakh crore has been allocated as budget for the Ministry of Road Transport and Highways, which includes the NHI. So 5 to 6% usually is the consultancy cost, including the DPR preparation and the supervision, construction supervision. So last year, considering our success rate of 22 to 25%, we are expecting 200 crore plus orders for this FY23-24.
Okay. So current order of unexecuted order of around 226 crore plus 400. So 400 would be the approximately size of the order that we going forward.
Yes.
Anything you're seeing is any high margin orders has been added?
Yes. So high margin orders. Yeah. Yes. So there are, Rajesh sir also mentioned that the IPMCL traffic survey project is a quite high margin order. And though the initial expenditures, we had to purchase a lot of assets because this is 365 by 24 by 7 traffic surveys being carried out at different locations all over the country. And we have been awarded with 2 zones. So there is a lot of machinery to be procured for these projects. So the initial setup cost is high, but these are high return projects as well. So we are targeting such projects. And second is the Ganga Expressway also. Like I said, it's a 21-22 CR order, a single order. So that is also a high margin order which has just started. So as the order value is also high, the initial expenditures are high.
So you expect that that project is complete by in this current financial year, or it will take FY25?
It will take 3 years to complete.
3 years.
3 years, yes. The construction.
FY26.
Yeah.
So
yes.
The final some amount comes by FY23. FY26.
Yes. Our project is for a long tenure, because then after construction there is DLC, what we call as the defect liability period. So our appointment is for a period of 7 years. So the revenues will be distributed, but during the construction period, 70 to 80% revenue is achieved.
Okay. And as our major customers is the government, we will have KI. How is the payment realization happen? Is it smooth or it is quite delayed?
No, it is very good. In the past, we have worked with state governments. Then, as we went on building our eligibility in central government. So in central government, it's an online system completely. NHI uses a data lake portal, and MORS also uses a SAP portal. So sitting in our office, we can identify where our bill is right now, and accordingly, we have a strong listening team at every client's office, and but at an average, it is 60 to 90 days. Depending on what state it is. If it's a nearby state, it usually comes in 45 to 60 days. It goes up to an average of 90 days. But it comes in a timely manner. It is government money. So there have been no cases in the past where we have had to write off such amounts. So since we are government and we also are binded by that contract. So payments are always safe and secure. So we do receive it in a timely manner.
Okay. So in that case, what would be our working capital cycle?
Working capital cycle, Rajesh sir, you can tell her.
Working capital cycle is almost around 75 days to turn around the things.
Okay.
Yeah.
And of which the receivable will be?
Sorry?
Of which the receivable would be?
Of which, the trade receivable? Yeah, receivable is take around 70 to 75 days.
70, so it will make working capital. Okay.
Yeah.
Okay. And are you planning to have any capex for the current year? Like last year, you need to purchase some machinery.
So major capex is already being done.
Okay.
Just I will. Hello.
Yeah.
Yes, sir.
Just I will explain what capex has been done, almost 5 or 6 crore. That capex is needed for part 1, that is the IHMCL project which is awarded. Number 2, we have the assignments, regular assignments of DPR and supervision work, wherein also we need these assets or these equipment. Previously, we were acquiring or hiring it from market. So there were 2 problems. One, cost was going high. Secondly, availability sometimes is under question, and third is accuracy of the result. So we took a major call this year, considering the more profits, and we have purchased all these equipment, softwares, so that 100% now we are foolproof in Indian consultancy market as far as equipments are concerned. So it will add to our profits, it will add to our accuracy, it will add to our level of service because of our instruments owned by the company.
Okay. So any such cost also you expect going forward?
Hello?
Yeah, any such cost you expect even in the current year?
Current year, no capex is expected.
No capex.
Yeah.
Okay, sir. I just want one more question. Like, have you started working on any international order?
No, not yet. We have shortlisted for 7 projects, and we have submitted the bids, but the turnaround time is very slow because of the World Bank nature of the work. and we are expecting order at least 1 or 2 in current financial year.
Acha. Okay. And the quantum, it won't be the right time to say, right? Can you mention the quantum?
72 EOI we have submitted expression of interest, out of which 7 results are out and we are shortlisted in all 7. So definitely once the flow starts, we will be flooded with international orders also.
Oh, that is so great. That is so great. Yeah. I think I'll come back in a few again. That's it right now from my side.
Okay.
Yeah. Thank you, sir.
Thank you. The next question is from the line of Sriram as an investor. Please go ahead.
Yeah, I have few questions. So can you explain what is bid capacity clause and why is it advantageous for you?
Bid capacity clause is like this for the company having turnover between X and Y, say between 20 to 30 crore, they have maximum 10 numbers. Then 30 to 40 crore, they have 20 numbers. If turnover is between 30 to 40 crore, 30. And if turnover is average annual turnover of last 3 years is more than 40 crore, I think 50 crore, then there is unlimited. So we just entered into a unlimited zone as far as bid capacity is concerned.
Okay. And what is the unbilled revenue for this year?
Rajesh?
38 crore.
38 crores. And why is it high? I mean, last year it was 30, right?
Yeah, because there are certain projects, around 10 to 12 projects, which it means started at the fag end of the Q3, as well as there are some DPR project also is there, where the revenue is likely to be achieved on the milestone basis. So there is no revenue has been recognized. So unbilled revenue has been recognized. The billing will be done in the next quarter or maybe in the next 2-3 months.
Okay. And earlier in the call, you mentioned 4 areas of consultancy. So can you provide the revenue breakup for each of the segment and, along with that, what will be the, approximate margin?
So for DPR, our orders are presently 15% of the total revenue. Supervision is 70%, and 5% for the FY23 I'm talking about, and 5% would be for the other work, the advisory and the private work. So going forward, IHMCL revenues, that is the under advisory services, that will increase for FY23-24 as the revenues are yet to be realized. So this is it. And you had another question?
Margins for the
margins, yeah. So for DPR, our EBITDA margins are 25 to 30%. For supervision, they are between 10 to 15%. And for ISMCL, they are again 20 to 25% for traffic survey projects.
Okay, that's very good. Thank you.
Yeah.
Thank you. The next question is from Sanjeev Kumar Dimani from SKD Consulting. Please go ahead.
Namaskar, Tanvi ji, Pandurang ji, and Rajesh ji. Am I audible? So,
yes, sir.
Thank you. Very, happy and proud to see this kind of a company getting listed. I came to know about this company very recently, and I have started tracking. So my first clarification I want is from the discussion only. Tanvi ji said that 799 crore is our pending order, and then we started talking 250 crore is our unexecuted order. So can you kindly explain?
No, it is not like that. 800 crore tenders or bids we have submitted, and results are awaited.
Okay. Got it. Okay. Then the second question is regarding one conversation of Rajesh ji. He was replying to my fellow person. IHM service. Is it a correct word I have heard? IHM services. He said that for IHM services we have procured certain new apparatus or equipment. So is it, what I've heard is IHM or something else, Rajesh?
It is IHMCL. I will tell you, it is an Indian Highway Management Company Limited. It is a 100% subsidiary of NHAI. It is particularly formulated for IT improvisation in highway sector. If you have traveled abroad, you might have seen the difference on the highways, the signages, the connectivity, you can say the capturing the images, which is just started on Mumbai-Pune Expressway. You are getting penalized if you are overspeeding. So all these things is coming under IT. It also includes traffic surveys and collection of tolls, toll systems, software, hardware. All that comes under the IHMCL.
Okay. So sir, we are erecting these facilities for NHAI?
No. We have been awarded only with the traffic surveys.
Okay. So traffic.
Because we are in a service sector.
So what this service is, can I understand, sir? Can you kindly explain?
Traffic surveys are needed for two purposes. First is to estimate the toll revenue for next 3, 4, 5 years. They need base number. So based on our traffic survey and our accurate results, they put the number in the bid, particularly in TOT contracts. And secondly, for expansion of highways like widening or strengthening or converting highways into expressways, they need certain traffic data. So that data is our data is a base for future of the India.
Okay, very nice, sir. Thank you very much. I got the answer. Now I am coming to one fine question, and before that I would like to say that, sir, am I right when I presume that human power or human resource is our biggest raw material? When I assess this, or I presume this, is it correct that raw material of this company is meant for only?
100% correct.
Because I could understand that your teams have to move to grounds to make a survey or put technology in use there, but human supervision is always needed for carrying out various surveys.
Yeah.
Am I right, sir?
Yeah. Just to add to it, not only human, it is human brain also. That is intelligence.
Brain also. Okay. Intelligence also is required.
No. Intelligence is more important. Out of say 400 employees, 300 plus are engineers. They are experienced engineers.
So, sir, now my question is that how do we ensure retaining them? Because one thing I could understand that you have reached the highest bid level where you can bid for all kind of projects. And my understanding is usually, people who get trained at your place, they can start their small enterprises their own way.
That is not possible here because when we select the personnel for particular project, the CV of that person has to be uploaded on the Infracon website, which is a Government of India website, and outside Infracon, no person is allowed. And once we bid for the project and the project is awarded, the person has to give consent before award of project or at the time of bid. And once the consent is given and once the project is awarded, he cannot move anywhere till completion of the project.
Okay, that's very nice, sir. I was only wondering, that, we have to manage people so people can always escape, from responsibilities and all that. One more thing, sir, that I was reading that, unbilled amount is 38 crores. So is there no way, we can change it to a method whereby, till the bill is made, some amount of monies are received by us against the work?
I want to explain it. The unbilled revenue is mainly for IHMCL project where the payment is on quarterly basis, but expenditure is on daily basis because our teams are moving on the site in volumes along with the equipments and vehicles. So expenditures are largely on that part. Secondly, DPR, detailed project report, wherein our services, our bills are based on the milestone basis.
Okay.
So it is typical of RFP, typical of agreement.
Okay. So when we render DPR service, we are an external agency which is certifying, certain things. Am I right?
Yes, correct.
Right. Now I know that every day we have to incur expenses, for these kind of surveys, right? So are they being put as inventory in our books when we are closing it on either quarterly basis or annual basis?
Every quarterly basis we are doing that thing, because in our supervision service also we are incurring the cost on the daily basis, or you can say monthly basis. We are incurring the cost on account of the rental charges for the staying there, our staff, guest house, offices. Then we have procured the car, rental car. Then we have to make the payment to the salary. However, we are raising the bill at the end of the attendance, everything. So it takes 45 days to raise the bill to the authority.
Right.
So at the same time, the expenditure which is already been, so that is we are following the accounting standard, which is been saying that the input cost method. So on the basis of input cost method, we are recognize the unbilled revenue.
Okay. So sir, in this balance sheet of 31st March, I want to ask you otherwise also about other current assets. So in your current asset, there is a head other, that is 14 crore. So is it, what is the nature of this item? 14 crore is shown as other in the current assets, in the balance sheet, which you have published on DSC.
Just a minute, sir.
Haan ji.
Other current assets 14 crore rupees, no?
Haan ji.
So these are the on account of the TDS amount, which is lying with the authority, TDS receivable.
Okay.
Apart from the TDS on GST, TDS on income tax, and certain amount of on account of retention money which is lying with the authority.
Okay, got it. So here it is shown like this, and I think trade receivable is okay, and then cash equivalent and everything. Okay, sir. Now I am coming to final question, where you are showing your expenses as capital, because if you have not raised the bill for the services for which we have incurred our expenses, so are you showing them as some inventory or asset somewhere in the balance sheet, or it is fully debited and this 38 crore revenue, when it comes, will be entirely our profit?
No, sir. So how it has been worked, some 38 crore mean expenditure which has been incurred already, against which inventory has been recognized in the form of unbilled.
But in the balance sheet where this item is shown, sir, can you kindly?
Yeah. I will show you. This item is being showing under the other current assets.
Other current assets. This entire 49 crore is a single item, which is our total spent this thing. Okay, got it, sir. Achha, now, sir, coming to the final this thing, can you just explain me, Tanvi madam was explaining certain percentage of revenue of various activities too. So one activity I could understand is defective, services.
Defect liability period.
DPR they called it, right? And the second one which you explained is that you do lot of search and research for them and do surveys, right, sir? So that is the second way of getting revenue from these projects.
So I'll just detail out in a simple way. Yeah. So the first is DPR, wherein we do the feasibility study. So we have to check whether that project is technically and economically feasible.
Acha. So, madam, can you tell me the full form of DPR?
Detailed project report.
Detailed project report. Okay, thank you.
Yeah. So we carry out everything from the surveys to designs, land acquisition, forest clearances, preparation of contract documents. Everything is done under DPR.
Okay.
Yeah.
Then?
Second comes the supervision. So when now the DPR is prepared, contractor is appointed. So to supervise the contractor's work, a consultant is needed on a day-to-day basis.
Very nice.
Government does not have that many machinery and manpower to supervise these projects. Hence, they appoint a consultant, and we are the certification authority in that case.
Okay, very nice. What other activities that we do, sir?
These are two. And third activity is the advisory services. Herein, basically, we carry out the surveys So we have a lot of equipment, imported equipment like the retro reflectometer, falling weight deflectometer, mobile bridge inspection unit, automatic traffic counter cum classifier. So these equipments are needed to scan a particular road, to check its quality, to carry out surveys, to check the reflection on signboards. So these kind of services we also provide to the government as well as in some cases for private contractors. And fourth is the design services. So we have an in-house highway and a structural design team who carry out the detailed designing of highways and structures coming on the road. This is mainly for private contractors.
Right. So thank you very much. I have been given to understand. I come back in the queue if required.
Sure. Okay.
Thanks. The next question is in the line of Himani Uban from Suraj Enterprises. Please go ahead.
Hello.
Yes, please go ahead. You're audible, yes.
Yeah. So my question is, margin improved drastically in Q4 FY23, but for full year it has decreased. Can you please explain what's the reason?
Yeah. So as I've explained that this is mainly due to the traffic survey projects that started in the Q4. So the depreciation cost has gone on a higher side. Along with that, we have received close to 150 crore plus orders in the FY23 for which the initial mobilization expenses are high.
Hello.
Yeah. So the Q4 overall it has been good. Only thing is few sales are to be recognized in the coming quarter, and the expenditures are on a higher side.
Okay. And what guidance for EBITDA margin you would like to give for future?
So it is different for different kinds of services. For DPR, it is 25 to 30%. Then for PMC, it is 15%. That is the supervision work, 11 to 15%. For advisory, the surveys, it is 30%, and for design, it is 40%.
Okay. Yeah. And what is current unexecuted order book, and what is average period to complete it?
Yeah, 230 crore is the unexecuted order book as on date, and the expected time completion is 2.5 to 3 years.
Okay. Any big project in hand?
Yes, Ganga Expressway project is the highest one. First, that is 22 CR. Second is the ICMCL, the traffic survey projects in 2 zones, that is 10 crore. And then there are other PMC projects in Andhra Pradesh, BPR projects. They are also to the tune of 15 to 18 crores.
Okay.
Yeah.
Okay. Thank you so much.
Thank you. Yeah.
Thank you. The next question is from the line of Tushar Ragatate from Kamayakya Wealth Management. Please go ahead.
Yeah, thank you for the opportunity, ma'am. Out of the total order book, so what percentage comprises of DPR, PMC, advisory, and this services? Hello. I just want to understand the percentage contribution of all the services you provide.
So, unexecuted order book, out of which the DPR project worth rupees 15 to 20 crore rupees is unexecuted. The traffic survey is around 10 crore rupees. The balance is on the PMC side.
Okay. Fair enough. So out of this bid project, which you expect to order, so the orders are more inclined towards bid services?
PMC.
Okay. And sir, Dhruv is kind of, making the quarterly run rate of near to 20 crore. can we expect in the next 2 to 3 years the company can increase its quarterly run rate to 30-35 crores going forward?
Just I would like to explain the future plans. Am I audible?
Yes, sir.
So recently one new corporation is formed in Maharashtra. Its name is MSSIDC, Maharashtra State Infrastructure Development Corporation. This corporation is 100% government of Maharashtra owned company. They have been assigned a task of working outside Maharashtra on infra projects, either G2G or on TSPC, IRCON or Rail Vikas Nigam Limited, wherein we are likely to be nodal consultant for that corporation. That is a big business coming up. Secondly, another corporation is there, again 100% on government of Maharashtra company. Its name is MahaPreet. It is the Mahatma Phule Renewable Energy Department, and they have assigned a green hydrogen supply for RCF amounting to 10,000 crore rupees. And now they are in search of investors and developers supplying the green hydrogen or ammonia. So, touch with Brookfield, which is an international agency, and in principle they agreed to enter into agreement with MahaPreet, wherein Dhruv will act as a nodal agency and consultant also. So, big assignments are expected in current year. Other than this.
Hello.
Tushar,
Yeah, I
are
can.
able to hear you.
Yeah. So I just want to understand, how does that explain? So can you quantify the opportunity going forward? What sort of opportunity you are seeing?
I'm sorry, we have lost the line for Pandurang, sir. We're just reconnecting him.
Okay, sir. Yeah.
Reconnect to the call.
Hello.
Yes, sir, you're reconnected.
I was disconnected. So these are the two big assignments I am expecting current year, and that will also the core sector, or it is diversification in sort of diversification, and also it will add to the revenue numbers and profit numbers.
Just one question. So if you quantify the opportunity which you are foreseeing, so what sort of numbers you would add?
It is almost double than what we are getting now in a year, in terms of order book, in terms of profits.
Fair enough, sir. Yeah, thank you.
Thank you. The next question is from the line of Sriram R. As an investor, please go ahead.
I have two questions. In terms of scope of work, how is it different from, let's say, rights or WAPCOs?
Hello, Tanvi.
Hello. Yeah. Okay. I think sir got disconnected.
No, I will answer.
Okay.
So basically, RISE is a government of own India consultancy firm. They are working exclusively for Indian Railways and also sometimes for IRCON internationally and nationally also. So they are government of India backed consultancy firm. We cannot have any comparison with them because we have to get the work on competitive basis, not on nomination basis. That is one. Secondly, they are only in the railways and we are in many verticals.
Okay, and so do you compete with WAPCOs then?
Pardon?
WAPCOs?
It is also like rights only. It cannot be compared. They are 100% own government of India company. And we are totally private company.
No, I understand that, but in terms of, so the NHI portion, do they compete with you or no?
Yeah, they do compete with us, but they don't get qualified either, or they don't get numbers what we are getting. Our core sector is highway. Their core sector is totally different. So it is not comparable. It is not apple to apple comparison.
Okay. And so one more question. If I look at your past, track record, you used to do 20% plus margin, and now, about 70% of the work you're saying you're getting 10 to 15%, but your margins are still on the lower side, like it's around 10-11%. So, I just want to understand what is the margin trajectory for the next couple of years.
Tanvi?
Yeah. So the earlier margins that we made, yes, margins are there. Now competition has increased a lot in India. You can see the budget provision that is being done in the country and to the road sector. So yes, over the past few years, the competition has increased, which has had an impact on the margins. So anticipating that, we are targeting new clients, like we backed the Ganga Expressway project. It is not an NHI or a MOT project, a different organization altogether. In addition to that, like Sir said about Mahapreet and MSIDC, so such organizations we are trying to, through these organizations we are trying to increase our client base, which will in turn have an effect on our margins. Addition to that, the ADB and World Bank funded projects that we are very positive about bagging, they are on super high margins. So again, we would be able to come on that track. For NHI MORs, the competition has increased, the costs have increased as the number of projects have gone on a higher side. And therefore, this balance between the clients is required, and we are definitely taking positive efforts towards it.
So can you just comment on your margin trajectory? I mean, like, what can we expect in the next couple of years?
Yeah, so as I told that the type of services that depends on the type of services that we are providing. So if it's a DPR project, we are bidding all of them. So for DPR project, you can expect about 25 to 30% margin. Like we backed the ISMCL traffic survey project, similar projects are coming up, and these traffic survey projects itself are extendable year on year. So traffic survey requirements is going to be a requirement of the government every year. So these are almost 35-40% margin projects. PMC is 11 to 15% margins, and the design services are again 40% margin.
Okay, that's helpful.
Yeah.
Thank you and all.
Yeah.
Thank you. A reminder to our participants, please press star and 1 to ask a question. We have a follow-up question from the line of Sanjeev Kumar Damani from SKD Consulting. Please go ahead.
Hari, namaskar. Actually, I was wanting to know who are our nearest competitors who are equally competing and competitive in our work.
Okay.
There were 20-25 companies 2 years back or 3 years back.
Okay.
But this bid capacity clause and the strictness of NHAI and more in terms of services, many companies are debarred from bidding process or they have lost the bid capacity.
Right.
And now only 5 to 7 companies remained in the market, namely SA Infrastructure, RV, NM Malviya, ourselves, and few more, 2, 3. There are 6 or 7 companies remain in market.
Okay. So, sir, actually, I was presuming that, many a company might have vanished in the process because it is to give good services, which is very important, sir. So how we are being rated amongst our customers preferred, because usually it is money terms only that decides, who will get the contract. But when we are bidding in government, do we get any edge, except this bid one is there, but in the same bid section, when 4 or 5 players are there, so are we being preferred or are we being liked or are we getting any bonuses for good work done?
No. It is based on the technical marks which are getting we are getting the advantage. Technical marks are based on 3 parts. One part is your experience, wherein all these things count. Second is the CV of the personnel put on the assignment. And third is your equipment and software bank. So in all 3 fronts, we are topmost in India, almost scoring now 95 plus marks out of 100. And others are not scoring more than 92 or 93.
So will it be that we will be virtually a monopoly in the days to come?
Not monopoly, because always 6-7 players will be there. Those who are debarred again will come in picture. Those who have lost the bid capacity will again come for the competition. International players are coming up. So competition will always be there.
Okay. And Madam Tanvi was explaining to some other fellow person that competition has gone up. So are we not able to raise the prices because cost of operations?
We cannot raise prices to the much for the reason that technical marks govern the assignment. So suppose I am scoring say 95, other fellow is scoring 94. I can bid 25 lakh plus, not more than that. If I bid for 50 lakh plus, then I will lose the job.
Okay, got it, sir. So at some reasonable level we can raise, but
Yeah. Reasonably we are raising, but again you can say it's a very volatile word.
Because the fellow questionnaire the person said that we were having 70% margin, and these days the margins are almost getting finished. Very thin margins are there now that way. So sir, thank you very much, and if possible, I'll get in touch with you someday in the office.
Sure.
Thank you.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference back to Mr. Gopal Chandar. For close, thank you, and over to you.
Yeah. Thanks everyone for joining the conference call of Dhruv Consultancy Services Limited. If you have any query, you can write us at vastupal@kirinadvisors.com. And once more, thank you everyone for joining the conference.
Thank you very much.
Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Kirin Advisors, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.